And hello once again. Welcome to Beating the Market. I'm Scott Welsh, and as you may be able to tell right up front, I'm trying a different recording method so that full screen is a little better. Is it better? Is this more fun to look at? I can't hear you. Anyway, I'll just move on. I want to talk about something I did talk about a little bit in the newsletter yesterday. I have a more example or a different example to talk about today. I think it's an important topic. I think it deserves 2 days. So let's move right into it. Three things we're going to talk about today is number one, on paper, and the two words that are critical here are on paper. Okay? On paper, buy and hold sometimes wins when we're talking about stocks. And what do I mean win? Well, I mean, if you look at the on paper, I said it again. If you look at the on paper returns of a buy and hold stock or a stock that you bought, put it away in your trading account and never looked at it again for years upon years upon years, there are some examples of buy and hold stocks that outperform someone who trades them. Meaning, I'm going to get in here, I'm going to get out there, I'm going to take a target here, I'm going to stop out there. I'm not in the market the whole time, I'm not just riding the waves, I'm going to trade this thing with systematic rules. That's what a trader does. But there are examples, and it was pointed out to me last week by a very good emailer, and I wanted to talk about it because this is a huge important point. Some stocks on a buy and hold method outperform a system. Some. Many do not, by the way. You buy and hold a non-high flying stock and it is terrible. It can go to zero. It can go to 50% down. It can go to all sorts of terrible things or sideways for a decade. Right? So I'm not saying buy and hold works on the whole. Absolutely not. Buy and hold hardly ever beats a system. Hardly ever. Ever. And buying and hold a market really, really can't beat a good system. A good system will beat the market consistently and all the time. That's what my research shows. That's what I believe in. So I'm talking a long time about point number one, but it's important to know some buy and hold does win. Well, does it? I just said it wins. I'm not sure it does. We'll talk about that. And we'll look at a real life examination of these two types of trading. Now, getting to know me until I build my trading studio and I'm able to come to you live and in person, I just have been showing pictures of me. Here's an older picture of me. I can't quite get my shirt button there. I'm having a hard time finding pictures with shirts on properly. But anyway, that's a picture of me. I hope that brings us closer as always. Now, I mentioned a little bit about buy and hold. Let's talk a little bit more about it. When a buy and hold stock, if you find a stock, an up and coming superstar, Amazon, Apple, Netflix, the crew, the cast, when one of these goes up, it is magnificent when it rises. It is sublime, and it goes at an exponential rate that buying and selling has a very, very hard time keeping up with. It just goes and goes and goes. It is amazing. Now, how do we know that ahead of time? Nearly impossible to pick Apple as your only stock pick and then buy and hold it for years upon years. You could have a portfolio of buy and hold, but now we've already talked about that. Systems beat an index fund, at least in my research. So if we don't just pick one stock, then we're not going to get those exponential returns. So we're talking about system trading or buy and holding one stock. And Apple, Google, Netflix, Facebook, the ones that have really risen, absolutely, it's hard to beat, right? And there's no work in that, right? Well, the work is, I guess, in analyzing, somehow predicting that something like Apple would rise over a decade. Don't know how you would do that. I mean, I have ways, but how do you predict something 10 years from now? Kind of difficult, right? And of course, you save on taxes. If you're a trader, then you have to pay short term taxes. And if you're a buy and holder, you don't have to pay those. You get taxed at a lesser rate. So you do the work up front, but then you don't have to do much, right? Buy and hold. Hey, it's easy. And less taxes. All right. So for those reasons, if you pick a high flyer, if you do, if you don't, It's going to suck. It's going to be terrible. But if you do, it's hard to find a system that beats it. Or you could try your hand at a high-flying, up-and-coming superstar stock like Valiant, VRX, and buy and hold that. And yes, it made a parabolic rise, but from 2002 to 2018, you would have bought VRX at 38 and held it down to 17 in 2018. So remember, for really big wins and to beat a system, you have to buy and hold one thing, or very, very few things. So let's assume we bought Valiant VRX and held it. We have not much money at the end of that time period. Or if you happen to buy it when Valiant was going crazy up into the 200s, if you bought it like, this company is going to be around forever, you would have gone from 239 to 17 by being a buy and hold investor. Okay, so I am readily admitting to you that if you can analyze and catch a perfectly trade a high-flying stock, it is amazing, right? Look at Apple. This is from stockcharts.com, free for everyone. You can see that, on July 2013, it's way down there. And look at April 2018, it's way up there, right? Now, that's what a high flyer looks like. It's hard to find stuff that beats Apple, correct? You with me? You may want to notice, though, what's all this, right? Oh, this. Haha. What's this? What's this? What's that little drop? What about that? All right. Even in a high-flying superstar, there are problems. We'll talk about those in a second. Oh, we'll talk about them now. I knew that was coming. For a buy and hold stock to make you the amount of money that you're dreaming of, that I dream of, you have to hold it. And therein lies the problem. The holding, right? Go back to that chart in your mind. There was a 50% drop back in 2009. Actually, that wasn't on the chart. It started in 2013. But go back to your own charts. And I started my research for this particular topic in 2008. I love starting in our financial meltdown to see what life would have been like had we been traders then. Anyway, if you had bought in 2008, you would have seen a 50% drop up into 2009. You going to hold that? I'm not going to hold that. Are you going to hold that? Then you're amazing. Or if you bought in 2008, this high-flying stock, Apple, doubled in 2011. By 2011, you would have doubled your money. So we're going to stay in, right? We've put all of our eggs in this basket. Somehow it worked out. Somehow we stayed in 2009. Probably not. But somehow we did, and now it's doubled. So you went through that trauma, that 50% drop. You made it back not only to break even, but a few years later, you've doubled your money. You're going to go through all of that and not sell? I mean, that's what we're talking about here. That's pretty freaking fantastical, right? I don't think it's possible, but maybe you did. Or you've gone through all that, and later on the chart, you could have seen a 23% drop in 3 months, right? Something like this. Or specifically, even worse, something like this. Look at that. You're going to make it through that. After all these gains, you're going to make it through a 23% drop in merely 3 months. Or 2015, there was another 28% drop because iPhone had some bad news. iPhone's not going to sell anymore. So you're going to hold that, right? You're going to make it through to get these returns. A 50% drop. You're going to have to stand prosperity. Then you're going to have to stand a drop, a fast one. And then you're going to have to stand another drop. 10 years. 10 years and you never, ever budge. That's what we're talking about, right? It is, I'm going to call it, impossible. I know of 0 people who could do this, me included. I'm not scolding anyone. You have to be a crazy person or just go live on a desert island for 10 years. But as great as this is, please don't forget this point. Most buy and holds never come back. Not most. Many buy and holds never come back. Some go through a 50% drop, and that's the beginning of the end. Some go through a 23% drop and it's over. 28% drop, bye-bye, right? Remember Enron? Does anyone remember Enron back in the 2000s? Enron looked just like Apple, and then it started dropping, and then analysts said to buy all the way down to zero. Going down to zero could have been any of these. We don't know Apple. We don't know what's going to happen to Apple, right? That is the danger and the impossibility of buying and holding. Okay, we talked about that yesterday. We expanded on it today. And if you want to be in the weekly newsletter, go to my website, scottwelsh.me, and get on the email list. But let's take another example. All right, let's pretend we're going to start this all over. And I don't know how about you, but picking these high flyers, especially if they don't have earnings or their fundamentals are sketchy because they're just starting out. Remember, Amazon had debt for years and years and years, would have been impossible to predict. Well, I don't want to use that word again, but it would have been hard to predict. Let's look at something that would be easier to predict. What does Buffett do? He wants companies that are easy to predict. Their earnings go up at a very steady rate. Their book value goes up at a very steady rate. Well, here is one such company, 3M, MMM stock symbol. It's an innovative, solid company that's been in the Dow Jones Industrial Index, the top 30, right? The Dow Jones has 30 of our blue chippers all in one index. MMM has been named one of the most or the best places to work, and again, most innovative. They're still relevant today. They're still important in our society. It's a blue chipper, right? We could have years ago gone back and analyzed it and said, right? Let's see. I think this is what we can do, right? Furthermore, I've done research. I've done testing on MMM since about 2012-ish. So I'm fairly familiar with how this company trades in a system, right? So let's look at it. Buy and hold. Let's say we did our analysis from April 2006 to April 2018. The stock price went from 80 to about 215. It's not bad. That's a compounded annual growth rate, CAGR, of 8.52%. Very, very similar to the market, which is what we expect out of a blue chipper, right? If you use full margin, if you went all in and used every bit of margin available in your stock account, then 10,000 would have grown to 26,000. I mean, it's something, right? However, there would have been a 70% max drawdown during this period at full margin. Okay? Anyone going to stay in, right? These numbers are fine. 80 to 215, fine. CAGR, 8.5, fine. 70% drawdown? Really? You're gonna stay in at 70% drawdown? Okay. Well, let's take a look at a system. Again, I've been messing around with MMM for a while. Okay. Now I'm going to use the Hornet system. I've talked about it in many, many, many videos. All it does is try to determine the trend and get in with the trend and go for small, reasonable targets. You wouldn't need to do any fundamental analysis. You wouldn't need any book values or PE ratios or anything like that. You just look at the Dow and pick one. And MMM is easy to pick because of its innovative and because it kind of moves. I mean, it moves a little bit. So you have a system, you just pick one. There's a start to every trade and there's an end to every trade, right? So we're not holding, we're not suffering, we're not worrying about news events. You just buy it and hold it. These are the rules, okay? Simple. System trading versus buy and hold. During the exact same time period, the CAGR, the compound annual growth rate, was 7.2%, so lower. And that means that 10,000 would have turned into about 23,000. Now, I mentioned taxes earlier. Yes, the taxes are higher if you're a trader, and this number reflects that. I took those extra taxes out. If they tax the same, then this would have done just about the same, right? So I took that out. So this is as realistic as I can make it for you. But here's the difference. The max drawdown was 50% using a system. Now, that's still a lot, and that might be way more than anyone can handle. But that is way, way better than 70%, especially doing that in real life. So the question then becomes, it makes a little less money. The system makes a little less money, but it has a lot less drawdown, right? So think about that. The drawdown was way higher on buy and hold. And as I mentioned in the newsletter, these buy and hold numbers aren't true if you don't buy and hold. Buying and selling everything is not going to get you any sort of numbers, right? If you sell your buy and hold at the first drawdown and you don't get back in because you're scared, a system destroys buy and hold. Buy and hold has to be perfect, or else a system will destroy it, will knock its little doors off. And who could have held, just blindly, nakedly held any stock in that drop in 2008, 2009? I still remember it very well, and it was super scary. A system, however, can thrive in chaos, and it also gives you discipline and rules to follow when things are going haywire. Systems have stops. There's an end to it. You're not just watching your stock go down every day, July, August, September, October, right? Yes, your system may or may not be performing, but there's an end to it, right? There's an end. Now, comparing the two, there are taxes. I've said it a couple times, right? But you can also compound because you're out of the market. So if you happen to get profit, if you start with 10,000, now you have 15, you can use $15,000, right? And up your trade size. If you get to 20,000, up your trade size. So that definitely helps offset and in some cases even surpasses the tax break of buying and holding. And when you compare the two, a system is not sitting there indefinitely, always on, always open to market risk. Systems get out. They get in and they get out. And it feels a lot better, at least from my experience. And these are the things you're going to have to seriously consider if you want to be a buy and holder or if you want to be a trader. Bottom line is this: buy and hold definitely wins on some high flying individual stocks. Yes, it works in the market, and the experts want us to do that, but system after system beats the market. That's why we're here on Thursdays, right? Beat the market, name of the YouTube channel? Okay. But a system that is traded beats a buy and hold system that isn't completed, right? If you hit the ejector seat in a buy and hold, it doesn't beat a system. You lose, right? Especially if you sold into a drawdown. That 7% cager that I talked about for the MMM system, that beats zero if you get out at break even or even at a loss, right? 7% isn't great. Yes, we can find things that do better, but in the comparison between buy and hold and systems trading, 7 is bigger than 0 unless my math is way off. And that's why for the second day this week, I'm trying to tell you that trading wins even when it loses. All right, that's all for this week. You can find all my courses for now on kajabinext.com. You can go to my website at scottwelsh.me and get anything else you need. You can also email me at scottwelsh@gmail.com. All right, everyone. That was fun. Love talking to you on Thursdays. We'll talk to you again soon. Bye for now.